Hello friends, in today's video, let's look at 7 interesting situations where the concept of operating cycle decides whether an item has to be treated as current or non-current. My name is Prateej and welcome to Deep Dive into IFRS. So before we get into today's video, in case you haven't watched my video on current assets versus current liabilities as per IFRS, kindly pause, take a look at that video and then come back so that with that understanding, the following situations will be clearer to you. So an operating cycle is a time between acquisition of assets for processing and their realization in cash or cash equivalents. In case an entity has not clearly defined its operating cycle, it is generally taken as 12 months. In the following situations, the concept of operating cycle might be taken as a standalone principle or it might be used along with one of the other 3 parts of the definition of current liability. So let's get into the situations. Situation number 1. You are an entity to whom IFRS is applicable and your normal operating cycle is 9 months. You have a creditor who has to be settled in 11 months. Now, and you expect to settle this creditor within 12 months after the end of the reporting period. Now, in this situation, should this creditor be treated as a current liability or a non-current liability? In this case, the creditor will be considered as a current liability, as in any case, it is expected to be settled within a period of 12 months after the end of the reporting period. Situation 2. Your operating cycle is 16 months and you have a creditor who has to be paid in 13 months and you expect to settle this creditor within your normal operating cycle, that is within 16 months. In this situation, is this creditor a current liability or a non-current liability? The creditor is a current liability only, as the entity expects to settle the creditor within its normal operating cycle. Situation number 3. Your normal operating cycle is 17 months and you have a creditor who has to be settled in 18 months. So in this situation, is this a current liability or a non-current liability? This has to be a non-current liability only because of 2 reasons. Number 1, it is not going to be settled within 12 months after the end of the reporting period. Number 2, it is not going to be settled within its normal operating cycle. Situation number 4. You are an entity with an operating cycle of 5 years. And suppose you have taken a loan for a particular project which is repayable in 3 years time. So how should this loan be treated as? Should it be treated as a current liability or a non-current liability? Generally, when it comes to loans, the immediate reaction for us is to take it to loans, secured or unsecured, and not to current liabilities. But if we closely observe the facts here, the loan is repayable in 3 years and the normal operating cycle is 5 years. So even though this will not be settled within 12 months after the end of the reporting period, it will be settled within the normal operating cycle. So in this case, the loan has to be a current liability only. Situation number 5. You are a business with an operating cycle of 4 years and the general credit period that you give to your customers is 2 months. But in some cases, for some high value customers, you have given a credit period of 13 months. Now, should this be treated as a current asset or a non-current asset? There are 2 different arguments here. The first argument tells you that you have not received the payment either within 12 months from the end of the reporting period or within the normal credit period that you give to your customers. So, considering this should be treated as a non-current asset. The second argument tells that although the points in the first argument are valid, you still receive the payment within a normal operating cycle, that is 4 years. So they should be treated as a current asset. So how you as an auditor or as a consultant take a decision in this case is up to you. Situation number 6. You are a real estate company and you have a tendency to purchase land whenever you get it at cheap prices. So because of this, you have a huge land bank with you. So is this land bank a current asset or a non-current asset? Now the classification entirely depends on the intention of the management. Suppose you have held this primarily for the purposes of trading and you expect to sell this soon. In that case, this has to be treated as a current asset. On the other hand, if you have kept it just for capitalization and with no clear plan about the future of this land, in that case, this might not be consumed or sold within its normal operating cycle. So, owing to this reason, this will have to be moved from current asset to non-current asset. Situation number 7. You are an infrastructure company handling a lot of major projects. And for each project, the completion period is different. Because of this reason, for the entity as a whole, there is no single operating cycle. As per the accounting policy, for each project, depending on the time required to complete it, vendors, the customers, etc., a separate operating cycle is assigned. And for each project, there is a lot of retention money due from your customers and you have specific borrowings also for each project. Suppose for project A, the operating cycle is 4 years and the retention money due from your customers will come in 14 months. And the project specific borrowing has to be repaid in a period of 15 months using the revenue earned specifically from this project. So So in this case, both the retention money due from customers and the borrowing payable will be treated as current asset and current liability respectively, because all this happens within the normal operating cycle. Suppose in this scenario, instead of 4 years operating cycle, the operating cycle was 12 months. In that case, both the retention money due from customers and the borrowings payable will be treated as current, non-current assets and non-current liability respectively. So as you can see from the above situations, how you apply the principles to a particular situation decides the classification. And a small change in the facts will entirely affect the way you classify items as current and non-current. So whatever judgment you are arriving at, they should be backed properly by the principles laid out in IFRS. I hope this video was useful to you guys. Till I see you in my next episode, thank you for your valuable time.